Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. Drew Dosick here with Verified Investing. Thanks for joining me today on Trading the Close, where we had really a lot of sideways price action today and almost a doji candle potentially forming on the S&P 500. The stocks are still ticking, but let's find out where everything's panning out today on the market summary board. Let's take a look. As we see here, we got the Dow Jones up now 0.5%, looking to close near all-time highs for the Dow Jones. Very nice push there on the Dow Jones. NASDAQ down 0.1%. S&P 500, as I said, basically flat today, up 0.02%. U.S. oil still hanging out under $58, up 0.86%, although, but gold, guys, got rocked today, down 5.81%. I highlighted this last week, folks, and compared it to 1970s charts. For those that didn't see that, we'll take a look at those similar charts to anticipate where price action is likely to go in the near term for gold. Bitcoin, as you see here, had a beautiful day, now trading up above 110,000, up 1.21% on the day. So let's jump into S&P 500 heat map, see where all the bigger stocks landed at the end of the day today. We see Nvidia down 0.64%, Google down 2.23 or 2.36%, AVGO down 1.69%, JP Morgan down 1.67%, Amazon is holding up nicely, up 2.61%. We'll get into a few other charts as well as gold miners, as well as another meme stock at the end of the show today. So stick around for that to see where price action could go. Meme stocks are still flirting around. That tells me there is still a chance of price potentially going higher. Now, here in the last 10 minutes, we can see price action is starting to push up there on the spiders. Here's the SPY as we see here today. You can see price action. We opened up down here and then we jockeyed, rallied higher, then had a midday sell-off right around 1250. And now we find ourselves right here up 0.12% on the day, almost a doji candle on the day. Not quite, but it's definitely a narrow body bar. And again, I'll bring your attention to this big red candle. That's what I'm focusing on. That's what I'm still focusing on, because today we really didn't have a lot of price action up or down that's going to get us either above this red candle or start sending us down towards the lower half of this big red candle. Also notice we've got this inclining trend line right here. Currently it's $673.74. Tomorrow, just a little bit higher, right around $674, which also corresponds with the high end of this candle at $673.95. That's the line in the sand. Will Netflix earnings this afternoon take us over the edge and start pushing us higher? We'll find out, but we do have a lot of earnings reporting this week, including Tesla too. So let's go back further on the chart so I can show you this longer term trend line has held down price since August of 2022. And now we're bubbling right up against that price action now onto this trend line. Tells me that, guys, time is likely up. Now, we already did touch and pierce this area a couple weeks ago. Now, will price, when it retests it, break through or then get rejected again? We're going to find out, obviously, this week. So a lot of price action in critical spots on the charts, especially considering a massive red candle that we see. That should lead to technically more downside in the near term, but we've rallied back strong. So you got to give credit to the markets where credit is due. And another rally back to show too on the Qs. You can see here on the QQQ, price action has moved up all the way to the top, but it's really not much change from yesterday as we're putting in a doji candle here on the Qs as well. Nice narrow body bar. And guys, to highlight that too, for those that are unaware, doji candles typically represent indecision, okay? Go back through a lot of charts, whether it's S&P 500, the Qs, look on the daily time frame. Notice these narrow body bars, how they occur oftentimes right at the tops of the charts. And when they occur at the top of the charts, that's telling you there's equal amounts of buyers and sellers. It's basically a battle going on right there contained in that candle. And so you have to understand now that all of a sudden we've been rallying up, but now sellers are starting to equate the buyers. That could point to a pivotal point that we could start moving down lower once those buyers subside and the sellers take over. That could push price action back down. And when price action accelerates down, that's when everybody runs for the exits. We're not there yet, but definitely right on the cusp, right where price action is currently located at the top of this red candle. Next up, SMH, very similar scenario. Now, SMH yesterday, we closed above the red candle, but didn't follow it up today and push above this candle to confirm any sort of breakout. Matter of fact, we had a down day on the SMH. So that shows that this, as of right now, this candle close yesterday was just simply that, a test close up with no follow through and confirmation to move price higher on the charts. So still jockeying around SMH, telling us really not great insight. Are we going to start going down or up? Undetermined at the state. We'll find out more later this week. Next up, the IWM. Now, the IWM has already clearly beaten this big Friday, October 10th decline. We had price action come right back up, and look at the gyration and really volatility here in the IWM, tagging this 50% area, the parallel, almost tagging it here on Friday, but then since bounced up, and both yesterday and today, really price actions chopped sideways. A lot of inflow of capital into some small cap stocks, especially energy stocks, tech stocks, you name it, has really kept the IWM elevated over the most recent trading days. Next up, the Dow Jones. As I said, guys, look here. We closed up here at the highest point on the charts. Now, the Dow, as we see, clearly taking over the Friday, October 10th. But again, this is not necessarily a leading indicator for me. It's a collection of 30 stocks, and also it's weighted differently in the DJI compared to the S&P 500. They don't have the same weighting. The weighting and market cap is actually stressed more in the S&P 500 rather than the Dow Jones. So this isn't necessarily a great broad view of the markets. Nonetheless, I do still follow the Dow Jones, and noting that it is closing at all-time highs is a major accomplishment for that. So good for the Dow Jones. If the Dow Jones continues to push up, next resistance will be right here on this trend line, currently right around 48,000 points on the Dow Jones. Next up, Bitcoin, guys. Check this out. All trading action is contained now in the lower half of this inclining parallel channel. To remind any new viewers, to show them too where this parallel channel is derived from, it's basically since the beginning of 2025. We really have had price action with some deviation here, and then most of the remaining price action has all been contained in this inclining parallel channel. So far, we've got great support right here at the $105,000 area, has propelled price back up above 111,000. Immediate area of resistance will be right here at the 50% area of the parallel, around $116,000. But if price comes back down and tests this lower end of the parallel, folks, we're likely going lower, okay? This has now been the third hit of this trend line. The fourth hit is a coin flip chance for price to continue moving lower. And then the next target is down here at 97,000. And you better believe once price crosses $100,000, there are going to be a lot of investors eager to start buying more Bitcoin. So we'll see if that happens. And definitely I would be one of those investors. I'd be scooping up some more Bitcoin down here near $100,000 for a potential chance of a rebound and push up higher on the charts. Next up, gold. Now we're starting off gold way back here in the 70s. If you notice down here in my charts, 1979, July here of 1979, and then this is 1980. This is on the weekly time frame, all right? So you can see here once price started breaking out on gold, we can count here. We've got 1, 2, 3, 4, 5, 6, 7, 8. And then this, the ninth weekly candle, saw a massive reversal in price action. Now you notice when price did come down on gold, we still did get a bounce, but then we started selling off further. So that little bounce wasn't the end of the selling, right? So we had a couple weeks where people were jumping back into gold, and then we started having further selling pressure, almost coming back to the zone of consolidation right here. All right, so if we're going to replicate this pattern in current times, we'll fast forward the time machine over here to current times, and you can see we're starting to put in that big red weekly candle. Obviously, this is only Tuesday. We're not done with the week yet, but if we're going to have a similar drawback, that's going to put price slightly above the consolidation area that occurred before this breakout on gold. That would be roughly potentially as low as this $3,600 area. But since I have support right here on the top end of this parallel channel, that's where I think price is going to be coming with gold, around $3,700, as you see here on the chart. Let me flip it to the daily to see how nasty this daily candle is here on gold. A massive sell. And I was talking about this yesterday. I said we had one red day, followed it up with another green day, very similar to what happened over here. And then we started taking off again. I said, are we going to start taking off, or are we going to decline? And everything was telling me with the time count according to the chart in the 70s, we had a similar time count over here on the weekly time frame. You can see this here: 1, 2, 3, 4, 5, 6, 7, 8, 9, and then here's the 10th coming down. You could even argue to start counting at this area of the breakout. That would put the exact same time count going on the charts here on gold from the 1970s to the current time, with this being the 8th candle now then coming down, counting from this breakout candle. Very interesting price action, how similar it is when people start hitting the sell button, and this massive red daily candle will likely still generate more sellers in the near to midterm. So this right now would not be the bounce opportunity or buying opportunity on gold. The aggressive investors can be buying right around the $4,000 mark, but I still think gold has a good shot of coming back down here to the inclining parallel channel right around $3,700. Next up, silver also saw a big hit in the metal commodity sector. Geez, look at this drop and plunge on silver. Now notice, guys, too, flipping over to the 10-minute chart, had this one trend line designated on the daily as support. And this is how it works, folks. A lot of people look at technical analysis and say, well, if that trend line has price come through it and it pierces it, well, it doesn't work, right? It needs to hit that line and bounce right on the penny and start going up. Well, guys, that's just not how it works. How it works is as displayed right here on the charts. This area clearly is defined as a level of support. I can just flip back over and show it to you at $49.83. But notice on the 10-minute chart, when price plunged right back through here, price got right back above, fought to get up to $50.39.40, and then all of a sudden started selling again, bounced off that level again before plunging through. And what have I said on this show so many times, folks? When price breaks a trend line, it likes to go back and retest the trend line, much like it did right here on the 10-minute chart before plunging further down on the charts, selling and now getting close to the end of the day here at $48.41. Interesting stuff, but this is how technical analysis works. This is why I don't like to buy the first support level after a massive rally. I'll be hanging out somewhere down here under 46.79, potentially 44.26. And then even if you're super conservative, right down here under $41. This inclining trend line, as you see, I stretched that out to December, and now we're talking about $41.40. So somewhere around this zone, around this inclining trend line that you see displayed out on this chart, and this inclining trend line comes all the way back from January of 2023. So price, again, what does price like to do when it breaks out of trend lines? It often likes to retrace and tag that trend line again. Now, since this was such a massive push up, we may not get all the way down there. That's why it's not a bad idea, if you're interested in going long on silver, to start picking some up around these major support levels. And then should price get all the way down here, reserve some capital to start picking up a little bit more, bringing that average down on silver for the pending bounce, especially if we have continued selling pressure. We should see a nice bounce there on the chart of silver. Next up, U.S. oil. Now notice what oil's doing over the last 3 trading days. We are hanging out here, putting in some immature bearish consolidation. When I say immature, I mean it's only 3 candles, right? For that to mature, we're going to need at least 7 candles going sideways, maybe even curling up a little bit to call that a full bear flag, ready to break up and fail on that bear flag pattern, or ready to break down. But what I see happening every one of these last 3 days is we're starting to have and develop these wicks down here at the bottom of the daily chart. So you can see that that's a lot of buying pressure. Yes, there are sellers keeping price down on U.S. oil, but as soon as price gets down low $56, you have investors scooping this up, creating all these wicks. This is now multiple tails in a row. This is implying that we likely are going to be getting nearer towards a bounce rather than this bearish consolidation playing out. A bounce would take us right up here to $61.50 on the chart of U.S. oil. Next up, Nat Gas, another accelerated push higher. Great move on this. This now makes 3 beautiful green days on the chart of Nat Gas. So this area now will be support, $3.83. Next resistance at 408. If we tag that tomorrow, I'll have some other or more resistance lines for going up. But near term, folks, Nat Gas is overbought. I would anticipate a lot of consolidation potentially within this range over the next several days, potentially a couple weeks before we either break out or start breaking down. And a pattern will develop over the next several days, giving us better insight as to which direction Nat Gas is going to go. Next up, we've got GM. GM, as you see here, reported earnings prior to the bell. Beautiful beat. They beat on both earnings per share, 22.36%, as well as revenue by 7.89%, and also increased guidance. Nice push and move on the chart here at GM. Next destination for GM, if we do have this continued upward momentum, isn't that far away. You see, I've got an inclining trend line mapped out here on the charts, derived from a pivot back here in February of 2023, connected over to the most recent pivot that occurred in November of 2024. And voila, we've got resistance not that far away, folks, right about $70 on the chart. So it's pretty common for whenever stocks have big moves to follow them up with another day or two of pushing higher on the charts. Then you could read that resistance. If you're already in GM, this would be a good place to sell this on a short-term basis. Of course, I'm a swing trader, so everything I'm doing with analysis is trying to determine where price is going to go in the very immediate near term and capitalize on the price movements, get out right here, then buy on any sort of pullbacks. First level of support will be down here at $60 on the chart of GM. Next up, we've got Ford. Ford, as a sympathy play, did also push up higher. Nicely done today on Ford, up 4.75%. But notice it's running right back into this resistance trend line, currently right at $12.68. You should be anticipating resistance there on the chart of Ford potentially as early as tomorrow. Now, we're not as overbought on this chart as we displayed on Nat Gas, but still in the near term, beautiful move up and right into resistance. And to show you where this trend line comes from, this comes all the way back at the COVID lows, folks. Now, notice when price first came into this area on November of 2023, got a tremendous bounce up. Then we jockeyed around this area, got rejected inevitably, and then came back up, retested this trend line. Now we're trying to attack it again. So anticipate, instead of a potential surge through here, we may end up consolidating over the next several days and then explode moving higher. Now, another catalyst for this is on Thursday. We've got earnings on Ford after the bell. So that could very well give a nice gap up on this chart, get us above this resistance level that will free up space for Ford to run until the next gap fill area right here around $13.60. Granted, they've got to have good earnings in order for that to happen. So we'll see how that plays out later this week. Next up, we've got Target. Target also. Now, you notice, folks, like I pointed out the S&P 500. We're up near the top of the charts, right? It's looking like a lot of the high flyers, the AVGOs, the Netflixes, the NVIDIAs, the Apples, a lot of these stocks that are up there at the top of the charts, they're likely going to have some profit take place, especially if the S&P starts coming down. A lot of other investors will scoop up those profits and rotate money. I'm already starting to see money rotation going on here. Prime example right here with Target. Now let's just rewind the clock a little bit. Flip over to the monthly time frame. Look where current price action is. You can see it designated by this blue line coming across the screen. Well, wait a second. What did we just cross? We crossed the COVID lows, folks. Remember, the world was going to end. A lot of investors thought we weren't going to have a lot of business going on past this. But now we have price action all the way back down here after Target was 260 plus. Now, I know they've had a lot of problems with different campaigns they've had, taking certain stances this side or that side. That it doesn't really matter. What matters are the charts. The charts tell us what's going on with the price action. And we're starting to elevate over the last week to week and a half, breaking back above this inclining trend line that I showed you came around COVID, folks. So if this momentum continues, Target actually has a lot of room to run. Next resistance at $99.45, followed by $108.17. But then I do anticipate a tag of this declining trend line right around $122.39. And that's derived from the previous highs all the way back here in 2021. You can see that's been attacked several times and has not yet broken through, but this very well could be the beginning of a move to attack and break through that declining trend line. Next up, Philip Morris. As we see here, Philip Morris had a steady, nice, decent decline today off of earnings. You can see here they did report earnings. Nice double beat on this too, and increased guidance. However, the stock just plummeted once the earnings were announced. We see here earnings per share up 6.95% and revenue up 1.97%. But where did price catch support, folks? Right here on this longer term inclining trend line. Notice this was derived back from April of 2024, connected over to a pivot of January 2025. And guys, you can notice this. We can count it very simply. We've got one hit, two hits. This was the third hit. The third hit usually generates a significantly strong bounce. That's exactly what we saw today. We zoom into the 10-minute chart and look at that nasty sell at the beginning of the day, all the way down, plunging beneath this area of support before rocketing back to finish the day. Well, like we see up here at 152.02, now post-market down trading at 151.05. So where does this take us with Philip Morris? You may see I've got another pattern displayed on the chart. We've got a head and shoulders pattern. This pattern has a measured move all the way down here at $127.59. So that tells me this selling pressure may very well not be done yet. Now, the way that this pattern gets negated and this measured move gets eliminated off of this chart is if you have this neckline get beaten with price action. You can see this strung out, this dotted line across my screen. That's roughly at $166.40. Now, if we get price above that, take this target off the charts. But this, to me, is telling me it's a great bounce in the near term. We'll see where price takes us in the coming days. If we curl back over, test this trend line, that tells us we're coming down to the next support here at 134.43 and potentially as low as $127.59. Next up, WBD did announce that they are ready to be bought, folks. And this has really been about 4 years in the making. There was talks about this going on back in 2021, and then they finally are going ahead and pulling the trigger, interested in selling both Warner Brothers Media as well as HBO. So the stock just ripped up higher today. But let's look about the history of this pattern. We had a head and shoulders pattern on Philip Morris. We've got an inverse head and shoulders pattern on the chart here at WBD. Notice this measured move up here, 1821, was already tagged. So that has been completed. That's what it should look like on a great chart with technical analysis. You spot these areas, you spot these patterns, and the price action plays out just as said right there on the chart. Now you can see we have some pivots back here from July of 2020 as well as November of 2020, strung all the way out across the charts, and price finally gapped up over that today, now putting a near-term high in closing. You can see we closed above the previous pivots right here. That could free up space for Warner Brothers to push up a little bit in the near term. But whenever you have buyout opportunities, once that buyout price is finalized, price is not really going to move that much from that buyout offering. If price continues to move up in the near term, next resistance is going to be up here at $23.72. Main thing for WBD needs to stay above this $19.21 horizontal trend line, as we clearly gapped and closed above that today. Next up, Newmont Mining facing pressure today, along with the rest of the gold and metals that we've just conveyed over this show. So you can see here, the miners typically lead the way on some of the declines. We already started pulling down a little bit on the charts. Gold was jockeying back and forth the last two trading days before the big decline that we see. Now, the major test comes up very soon. We just broke out of Newmont. Now we're coming back and retesting this trend line. Tomorrow, that value is going to be at $85.19. I would almost anticipate a small bounce off this level, potentially as early as tomorrow. We'll see where that takes us, but see if it takes us in consolidation right on top of this trend line, which then would imply more breakage and further downside pressure. Next, support at $84.01, followed by $75 and $67.72. Should gold fall down to the top end of that parallel, we'll be talking about price with Newmont in between $75 and $67.72. Lastly, this one indicator tells me, folks, the markets could very well still be saved. Look at Beyond Meat, guys. This on Friday of last week closed at 64 cents. 64 cents. Now post-market, you see it trading at $4.20. Goodness gracious. Look at that move. 550+% so far in just 3 trading days, folks. Now, what's going on? Well, Beyond Meat has finally got a little bit of good news, partnering with Walmart to sell some of their beef pea-based imitation meat patties, right? Because they don't sell any meat. It's all a vegetarian product. But with that good news, there also was reports coming out that they're heavily shorted in this position. Lots of institutions, over 60% of the shares were shorted. And once the meme stock craze caught this news, as well as a little bit of good news, they've been boasting about this all over Wall Street Bets, pushing the stock price up over 500%. Now, guys, remember with AMC and GME, these typically don't end well. I mean, we can see here with Beyond Meat, it's not necessarily the most profitable company. So they're really going to have to change a lot of fundamentals to keep this momentum up. Otherwise, we're going to see this balloon pop and price would likely come all the way back down here to the $2 range, $2.17. Just be careful. We could still see some shooting up in the stock, but it likely will end pretty nasty with a huge sell-off, much like what happened on GME and AMC. But guys, as I've said, as long as this sort of stuff with Beyond Meat is going on in the markets, we likely are still going to stay elevated because all of these type of plays tells us that people are willing to speculate. And not only just speculate, they're willing to gamble. They're willing to put in a ton of funds to gamble in the stock market. And when that happens, that means risk on. So really, we're getting a lot of diverging signals here. We'll come to find out a lot more details. And actually, before I go, let's check out what's going on Netflix, see if they've reported earnings so far. And they have. Look at this, guys. So here we closed up here at $1,241. Now post-market, we're down here at $1,181. So definitely coming down on the chart. Will this hold until tomorrow? If so, it's likely going to put pressure on the rest of the markets as Netflix is a major cap company. All right, folks, thanks again so much for tuning in and watching Trading the Close. Don't forget to like and subscribe and send this out to your friends so that they too can start learning how to analyze stock charts and so they can stay out of trouble and ultimately make some good money. All right, guys, thanks again. I'll see you tomorrow. Can't wait for it. Until then, I'll see you on the charts. Take care, folks.